Hey, good morning, everybody. Welcome to today's webinar. Today, we're looking at our COVID-19 SME Sentiment Tracker. It's a year in. I can't believe 12 months has passed. And with us today to take us through to the slides and the analysis of what's happened over the last year and the direction Australian SME heading in is my co-presenter and business partner, James Organ.
Morning, everyone. Thank you for your time.
Great to have you here again, James. I think the last one we did was August last year, and trying to cast our mind back to where we were at then. I think we were in a kind of fairly deep state of lockdown, some fragile signs of recovery, and a lot has happened since then. Obviously we've been through several waves of lockdown and so on and so forth. But 12 months on, when do we think things will return to some level of, use that word, normality? I'm not sure if I like that word, but
yeah, I mean, it's one of those things. I mean, when the last webinar was in August, Melbourne lockdown was ongoing, and the July and August numbers were not particularly positive. So clearly, we've seen a strong level of management since then, and ultimately the economic numbers have been very strong compared to other parts of the world. But it's not without its challenges, and I can't answer your question, Steve, and no one else can, about whether we'll get back to normality, whether we want to be normal, and I don't think we will be normal. So there's certainly some people that are not normal in the SME world, and there's some people who've changed being normal. So hopefully we can translate a bit of that today in terms of showing you the slides.
That's right, and it's clearly some, as you say, obviously we'll see through the slides, some sectors are bouncing back, others are still, struggling. Some companies have produced some remarkable results over the last 12 months, including Amazon seeing their profits triple in 12 months. So the impact has been fairly uneven. I think we can at least say that there's definitely been a case of winners and losers. So like I say, we've been doing this for 12 months. It's been a partnership between ACA Research, Fifth Quadrant and TEG Insights, really kind of leveraging our extensive expertise of being Australia's leading business research agency. So how many waves have we done, James?
Yeah, 26 waves. So we started on a fortnightly basis, but then we've moved it to monthly this year, just because we've got too busy to be pushing it out too often, and it kind of makes it easier to track and a little bit more engaging, larger sample size now as well. But so we're generally publishing at the end of each month.
Great. So obviously, across those different waves, we've got over 7,000 respondents. I guess it's a huge piece of research that we've conducted.
Yeah, sure. And I mean, it's an important part of the economy, and 2.5 million businesses fall into that SME segment, and we go outside a little bit that as well with going into reasonably large organisations. So it gives a good, obviously, snapshot of the ongoing state of SMEs.
And it's widely used. This from the get-go. We had pretty good traction, I think, even including the Treasury and federal.
Yeah, so I mean, the research has been very, very well received, and it's certainly getting into places that are very influential and ultimately demonstrates the value of it, because we started it at the beginning of the pandemic, or more or less at the beginning of the pandemic. So hopefully it provides everyone with a reasonably robust set of data on a regular basis.
Absolutely, and we're not out of the woods yet. And so, obviously, we will continue to run this tracker for the foreseeable future. So the agenda today is to look at the impact on business finance, the impact on jobs, and starting to look at what the roadmap begins to look like moving forward. Let's jump into this, James. And do you want to just take us through this first slide in terms of the decline in revenue?
Yeah, so I suppose the numbers at the bottom are the most important numbers in terms of the mean percentage change in revenue. So in April last year, we had 68% of SMEs reporting a decline in revenue. That dropped down to 71% in May, 73% in July, and clearly those first 4 or 5 months were painful. But it's the -35%, -33%, etc. on the bottom there that have obviously significantly changed, and we're now back down to 14% as a mean decline in revenue. Not perfect, but I think probably that lots of organisations have trimmed some of the fat out of their businesses in terms of the way they operate the process they do. So 14% is probably okay, and it allows them to be more operational efficient. But we have to be conscious that there's 43% still in decline. Great, 57%, and especially 17% of increased revenue is fantastic. But yeah, as Steve said, we're not out of the woods, and I'm sure amongst a lot of those people who are in the declining revenue side of things have also reassessed where they want to be with their business, and they might not be totally concerned about getting that revenue back to where it was, but just making sure they've got a better business and a more profitable business.
And we've done many SME sentiment surveys of SME finances and so on, and pre-COVID that chart would look something like what, plus 14% rather than minus 14%. I mean, what would a
within the SME sector, if you do research and you ask people about growth, you're looking at something 60-70% of SMEs are looking for growth. So it's certainly an inverse of that, where we're actually seeing that 17% have had growth. And I'm not saying that 70% get growth every year, especially in the micro end of the marketplace, but yeah, certainly a significant part of the market need to be growing to support economic growth, and obviously the employment that is generated through the SME sector.
Absolutely. So there's still some way to go. And then turning to profitability.
Yeah, so I think again a lot of SMEs probably focus more on profit than they have on revenue over the last 12 months, and including ourselves, we were very happy to use the JobKeeper program to keep things buzzing along. So so profit is obviously important, and profit going back, we actually weren't tracking profit from the beginning, but clearly going back to July, there wasn't a huge amount of people making profit, and that has increased steadily up until November. December was profitable, even though it's not recorded on here. It was. January we expect to be a little bit quieter for obvious reasons, but yeah, so again, I've marked those numbers in January, February, March. It's the people who are not losing money that is clearly important, and that trend hopefully will continue. But again, the concern within the SME sector is that the vast majority of those SMEs are in the small end of town. They are micro businesses, and these guys are the ones that are struggling to actually make a profit. Now, I'm sure that hopefully the owners of the business are still managing to pay themselves, but a lot of these guys probably are not paying themselves as much as they were in previous times. So this is one of the situations, one of the issues that people need to be aware of, that with recovery, with businesses that are larger, more sustainable, they have more opportunity to change during difficult times, and therefore they become more competitively advantaged, and therefore it becomes even harder for the small guys, and you'll see that consistently through this research.
It shows here those micro businesses which are not really seeing, they're seeing kind of a break even. I mean, is that just because the owners of those businesses are really paying themselves?
Yeah, I mean, again, there's various reasons for those numbers, and obviously a lot of them would have 3 or 4 employees, so it's not as if they could just stop doing what they're doing. But it does come down to, if you are a small retailer selling electrical widgets, you are now in a highly competitive situation where not only Amazon in your face, you've got JB Hi-Fi doing a better job, Harvey Norman doing a better job, and et cetera, et cetera, et cetera. Kogan sending out 1,000 emails a day to everyone in its world, and it continues. So those people that were differentiated as a online retailer, for instance, with 2 or 3 employees before COVID, where's the air for those guys now? Because they're certainly not going to get it in terms of being top of the search engine when someone does a search. So yeah, so there's pressure. There's going to be pressure. There's going to be continued pressure on smaller organisations, and ultimately in times like this, people tend to levitate to large and comfortable.
So I think that's a good time to look at this by industry as well. So you talked about profitability in small retail, and clearly, as evidenced here, retail is the sector that is particularly impacted in terms of profitability. But then on the other hand, if we look at production and the different subsectors within that, very different kind of story.
Yeah, so it is the haves and have-nots. Production companies tend to be larger. I mean, this includes manufacturing companies and mining companies, but also agriculture companies. Obviously, lots of agriculture companies are not huge. So that's the buoyant part of the market. And as everyone knows, selling lots of iron ore to places around the world is happening. Obviously, Rio Tintos and BHPs and so on are not included in this research, but all of the support services that provide services to those large companies will be included, and therefore that's why those numbers are strong, because it filters down to SMEs. So to answer Steve's question, yeah, the retail side of things, again, everyone gets bombarded every day of the week by super retail group doing well, Harvey Norman's doing well, etc., and they forget that the vast majority of retailers are not those large organisations; they're the smaller retailers, the people who are selling things on their website, selling things through Amazon and through marketplaces, etc. And to counter Steve's argument that Amazon increasing its profits, I think eBay's results yesterday, and this is US stuff, I think eBay's results were terrible, right? So does that therefore suggest that Amazon, etc., taking away the opportunity for those small retailers selling through places like eBay, taking away those opportunities, right? So there's some shift in behaviour, and again, everyone talks about lots of people spending money, lots of people upping their discretionary spend. It's not necessarily true, and where those numbers are is, again, it's been spent with those larger retailers. Elsewhere on that slide, I mean, hospitality is obviously it's very important that we see that those levels of profitability jump up again. So again, all of these places, have benefited over the last little while with more and more people going back to work, and therefore the associated passing traffic and events and other things that are coming back online. So that's good. Profitability in Queensland is lower. Again, still a lot of these businesses are reliant on travel and international travel, so there's probably an expectation that they still might struggle over the next little while. And so again, Victoria is positive that they've come back pretty strong after their torrid time.
And WA seems to be kicking on reasonably well.
Yeah, so at WA again, all of those businesses are benefiting from the price of iron ore being $180 or whatever it is today. So again, that all just filters down and helps. And yeah, I think the lockdown over there doesn't really impact them that much, and they kind of survive on their own.
And obviously, you talked about household spending and how that's clearly beneficial for the economy, and obviously that's been supported by government stimulus. So time to look at JobKeeper and the end of JobKeeper. Are we weaned off JobKeeper is my question.
Yeah, I know. And again, those numbers are fairly consistent over the last 3 or 4 months. Is the quantity of the number was about $1,000 in that last quarter. So they dropped down and it was fairly steady. So there was obviously that 16-17% of businesses that were most impacted and were struggling. A lot of those businesses would be those dependent on international travel, whether inbound or outbound, and clearly hospitality, etc. But yeah, I think most people knew it was going to happen. People prepared for it. We now see that the intention for most of these guys who received the final payment on April the 7th, 9th, whatever it might have been, they are going to try and keep all their stuff. So that's great. So again, it's obviously dynamic, and people have been working through this over the last 3 months to make sure that it's sustainable. So we all know, again, the job figures have been positive over the last little while as well, and hence no surprising there that we're keeping all staff because we're going to need them.
I guess the next 3 months are a fairly critical stage. It's not just JobKeeper, but there's other parts of the stimulus package that are being removed. There's the kind of protection around debt and so on. So we're kind of now running on our own 2 feet for the next quarter. And if we pull through the next quarter, then do we start to feel more confident?
Yeah, I mean, we're starting to feel more confident now, but yes, I think it needs to play out a little bit further. I mean, we can't judge after 30 days since the end of JobKeeper what will happen, because I'm sure there's plenty of those businesses that are going to say, okay, well, we'll try our hardest for a month and see how we go, and if it doesn't work out, then we'll have to get rid of people. So so I think the next wave of the research, which goes into field next week or week after, then that will probably give us a clearer picture, and that will continue for the next little while, and probably up until the end of the financial year, I would suggest, and maybe there'll be people that are falling over then.
Is there a case for any further government assistance, maybe more targeted assistance at certain kinds of sectors or businesses?
Well, I think there's two arguments. One argument is to say, well, we're supporting businesses that are not viable. They were never really viable, and we've got to end it at some stage. I think the government, again, have done a reasonable job of stimulating hospitality with the vouchers. That works into events, theatre, etc. That moves into hotels. Correct me if I'm wrong, in June. So I think they've done a pretty good job there. There is no doubt, though, that the people who are dependent on international movement, again, whether it's inbound or outbound, are the ones that are, how do you protect them, and should there be support for those guys, outside of the airlines or whatever, into the small travel agencies, etc., and the people who are reliant on Chinese tourists up in Cairns or whatever it might be. Yes, there probably is a need for that, but difficult to implement, because of just the broadness of, well, where does it stop in terms of the supply chain throughout that international travel sector.
As we transition away from all of that support, and then the question is, how confident are you about the survival of your business? And I think, as I say, we did that webinar back in August, and we were sitting there with levels of concern sitting, been around that a third of kind of businesses, and that's encouraging. That's fallen away, ticked up a little bit from March to April.
Yeah, and so I mean, you go back to April last year, and it was 35% that we got into second lockdown in Melbourne, went up to 36% in July, dropped down to October, November, December. Again, we were getting outbreaks and the lockdown in Sydney. So since then, it's again very positive in the context of how the SME world works. We expect 12% of people to go broke every year anyway. I think it is. There's, if you look at that, there's 9. If you halve it, because 50% of those with jobs think they're in trouble, maybe you say, well, 9% of businesses are going to go broke. So in that context, it's maybe not that bad. Clearly, during COVID, lots of businesses have been started by people who've either lost their jobs or decided that they want a different lifestyle in a different place, and there's plenty of those people. So we'll see what happens there as well, because it's not easy. Business person, and many people in the end might change their minds and decide to wind back those businesses. So I think there's going to continue to be a level of volatility in terms of those people, and obviously it's the motive thing. Are you concerned in the world? If you're a small business owner, you've always got a level of concern about something, believe you me. So do we expect that number to go up, or do we expect it to go down? Well, again, that really depends on how this plays out over the next 2 or 3 months, and some of that's out of control, whether it's vaccination related, whether it's border related, whether it's just inflation, interest rates, whatever might happen. So we'll see.
And you make a very valid point that the businesses that are probably under the greatest pressure are potentially those that are less viable anyway. And so to some extent it's just natural competitive forces that will have an impact here, and should they, I think your point's really valid. Why should we continue to throw public money after badly run businesses?
Correct, and the people working in those businesses are likely to get jobs quite quickly elsewhere as well. So it's not necessarily impacting anything from the employment level.
And you mentioned obviously the rollout of the vaccination program, which is coming for some criticism at times. How much of that concern over the management of that vaccine is underpinning some of this level of dissatisfaction?
I think a reasonable level. Again, I mean, we don't ask that question specifically, but again, you go back to last year, and everyone was pretty happy that, well, not everyone, but there's a vast majority of people who are either neutral or very happy about what was going on. So and that's kind of fluctuated again through the ins and outs of different lockdowns, but this is the lowest level it's been. So again, I'm not going to dwell on too much on the reasons why, but I can suggest JobKeeper and the mismanagement of vaccine rollout, but I would suggest the inappropriate behaviour of people in Canberra hasn't helped anything at all. That's not the question we're asking. The question is, how satisfied are you with the way that government is managing COVID-19? But as we all know, it's the management of the country and doing things properly that's more important. And certainly that mismanagement of that issue has not helped either.
So that's the end of the section around the impacts of COVID on business finance. We talked about unemployment and employment. So let's turn to the question of the impact on jobs. Treasury obviously is trying to get, the unemployment rate down into the kind of the magic 4 number. Not there yet. It's good to get to those numbers, and I think only WA is in that kind of territory with around about 4.8% unemployment rate. So looking at the impact here firstly on staff numbers, and previous slide we were looking at the numbers at the bottom. Is that where we need to focus here? The net?
Yeah, absolutely. So I mean, there's obviously, as we've seen, companies getting bigger, companies getting smaller, but it's the net employment level. So across all of the SMEs, the net employment level is -7%. So fundamentally, if you started with 10 people, then you might have lost less than 1. That doesn't work. That's not a very good calculation, is it? So if you, I suppose if you line it up with what the numbers are, where did we drop to? 5.6 or 5.2? I can't remember myself now. So it's fairly much in line with, I think we started at 4.9 before the pandemic. So it's pretty, it looks pretty accurate to me. So the average business is 7% down on employees. Again, that a lot of that will be through choice now as well. I think that, again, that everyone's looked at what they've got and would cut out a little bit of the duplication and the fact going on, maybe implemented technology to improve processes, to make things more efficient. Contradicting that, efficiency drives growth, and ultimately you need more employees. So I don't know, but all I do know is that the trend is, there's a strong trend. It's gone from -22% in July to -7%. SMEs have done a pretty good job of not getting rid of people, and they will be rewarded for that. And again, we saw that dip in December because of the pre-Christmas employment need, and hopefully we continue to see the decrease over the next few waves.
And that green bar continue to.
And the green bar is, again, it's a pretty consistent trend, which is what we're looking for as researchers. Going from 2% to 12% over the last 6 to 8 months, whatever it is a good indication that clearly there's some businesses out there that have taken advantage of the situation and are going really strong.
I know a lot of businesses now that are dusting off the strategies that they prepared pre-COVID, and that they've been probably, those strategies were kind of mothballed for a year. They're all now being dusted off, being refreshed, and coming back and looking at where they're going to generate growth, and therefore does that mean more jobs, or like you say, does it mean investing more in technology rather than in jobs? So that's the lens to look at here, is through job vacancies and job roles that SMEs are trying to fill. The numbers there in terms of new roles rather than replacement roles, that's encouraging. But are these new roles in the sense that the kind of roles that emerging out of the pandemic, or they're just the kind of roles that were lost during the pandemic and now coming back on the table?
Yeah, again, difficult to know exactly. You can see that the new roles has bounced around a bit. I mean, overall, you look on the left hand side, you can see that March dip, completely understandable, in line with JobKeeper ending. What's going to happen? We've now picked up. I mean, when we're talking, again, 11% growth since September. So in terms of the newly created roles versus replacement roles, I would suggest that those new roles are going to be in organisations that are looking for more growth, and hence I haven't asked the question, but maybe we will next time. I would imagine that they're going to be sales roles, they're going to be growth orientated roles, and roles which maybe technology roles in terms of digital optimization and digital enablement, etc. So I don't know. I mean, if we looked on Seek to see what the different roles are and the growth in those roles, which we do in another playbook that we've got, I'd imagine that would tell the story. I think, based on my conversation yesterday with a client, that Seek's got the greatest number of roles on it that's ever had. I don't know whether that's exactly right, but that's what I've been told. So
there's a government resource, I think it's called jobmatch.gov.au, where you go in and put your skills in that tries to match your skills to new vacancies. So, barista, this may not be a good example, but if you put in your skills as a barista, then it will find how well those kind of underlying skills can be matched into different kinds of roles. and that was quite interesting, you know, that again, that was talking about, you know, things like, you know, the vacancies that they're seeing more of, things like factory workers, which then comes back to that point about, you know, manufacturing and production. But I think it, you know, it kind of points in the data here to the need to kind of reskill or reapply skills into different roles. So if you're coming out of the sector which is shedding labor, you know, retail and hospitality, is where can you then redeploy that workforce without having to necessarily have a complete overhaul of, you know, skills and so on.
Yeah, which I mean is interesting in itself, right? So I mean, in looking at the reverse side of that, what's happening in hospitality is all these people that were working in hospitality have gone, oh, there's no jobs in hospitality, so I'm going to go and reskill so I can get jobs elsewhere. So what they've done is gone and got jobs elsewhere, and there's no one now to fill the jobs in hospitality because there's no transient workforce. So that's a nasty situation for hospitality, because all of these staff that they had are now gone to work in mine sites in Western Australia or in farms here or manufacturing companies there. So interesting dynamic in itself, which is going to, we're actually going to talk about it
we are going to come on to that. But it's a very interesting dynamic, and it's a dynamic, you know, that's happening, you know, globally, whether that's, you know, computer chip, you know, for cars, which can't be obtained because car factories closed and the chip manufacturers start supplying other customers, and then, you know,
exactly. And I mean, again, you know, and this talks to looking at, you know, earnings coming out of the States this week and in Australia as well. I mean, the facts of the matter are that those businesses with least friction seem to win, right? So the Googles and the Facebooks are coming out with outstanding results, but people are making cars not necessarily so, right? And so, you know, electric cars in China manufactured by NIO are not, you know, their results are not as strong as the Google and Facebook. So again, I mean, it does demonstrate that those large technology companies are well placed to continue to take over the world.
So I think this slide really kind of, you know, talks to this, you know, you talk about the bigger businesses winning over the smaller businesses, but they're doing better than the smaller businesses. It's harder for the smaller businesses to compete.
So just in terms of interpreting this data correctly, because I mean the business side, ultimately if you're a big business, you're likely to have people, you're likely to have empty roles, right? So you've got to be recruiting. So 74% of large organisations with 100 to 500 employees, you know, you kind of ask yourself what are the other 26% doing, to be honest. So you know that number doesn't tell a lot, but the industry data is the important stuff. So you've got those guys in businesses that are really strong, they're larger businesses, they're more financially stable, attracting lots of staff, and then you've got hospitality next door who are recruiting because they need people. So you've got production who are growing, and you've got hospitality who are trying to get back on their feet. They can't find people because production pinched all their people. And then you've got distribution, which again, you know, is clearly dependent on the Amazons and the Kogans and, you know, the Woolworths and God knows who else delivering stuff that's been purchased online. So those guys are going pretty strongly as well, although it's, you know, margin, there's always margin issues in that industry, which kind of stopped the growth a little bit. But, you know, again, it points to why are retail, so we go, why are retail not, you know, not increasing in size, not employing more employees? Because again, a lot of those guys are very small, and it's the big guys who are.
Yeah, absolutely. So a good time to be, you know, investing in, you know, reasonably sized Australian manufacturing industries. Is that a positive indication here?
Well, yeah, you know, if the demand is there, right? I mean, I think the export numbers went up by lots, but I haven't looked at the detail. I think that's obviously a lot to do with mining, but yeah, it just depends on what they do. Value-added manufacturing in Australia is kind of where it's at, and those companies that are producing all kinds of really, you know, smart technical things going gangbusters as well. So yes, if that's the space, but I think again, within sectors, there are the good and the bad, so you've got to be a little bit, you know, a little bit careful. But you know, I mean, in the retail space, if you're looking at the, you know, the likes of the, you know, the TPWs and the Adairs and all of those ones that have really, you know, again, optimized and that what they're doing and the digital performance and, you know, online this and online that. So, you know, there's a lot of good stories outside of the SME space which put pressure on the SME space, but also that creates opportunity as well. So
I thought you said yesterday that Australian wine exports have been rather dented by
So 96% down. So we're looking for good cheap wine, and I'm sure there'll be lots of it available.
So how difficult is it, to fill these roles? The vacancies are there, but they're not easy to fill.
Yeah, so I mean, again, this is a seriously bad number when you look at the trend, right? So you got 40% of these guys finding it very difficult, and discounting the top 2 codes a little bit because we've been talking about those for a while. But you look at these guys that I put the red box around, wage demands are too high. So that in itself, if these larger production companies start paying those extra wages, it keeps people away from the micro and smaller businesses. Candidates are not willing to work. Obviously, spent too much time on JobKeeper and a job seeker at home, and kind of like the lifestyle. I'm not sure, and then importantly for me, the lack of backpackers and migrant workers has jumped from 9 to 17%. So clearly, with those closed borders, and you look at the Indian situation. I'm not sure how many people come over from India each year, but it's a substantial amount, and a lot of those guys are, they're skilled workers, IT, etc., where clearly there's a need. So anyway, if that number keeps ticking up, someone's going to have to put something in place to address it, because it's going to stop growth, and it's going to impact on the recovery.
To the discussion we had previously about skills and just matching skills to the right industry, does that, the lack of qualified candidates also point to that issue in some way?
Yeah, absolutely. There's a lot of people. There's a lot of people recruiting, but having said that, too much competition from other businesses has trended down, right? So what does that actually mean then? So it means, okay, well, I'm trying my hardest to find people, but even so, there's just I'm not finding the people out there. Even I'm not sure if my competitors are, but I'm not. I don't know, but anyway. There's a lot of moving parts there that are going to cause issues. Whichever way you twist it and turn it, it's going to be painful if these trends continue. And again, I mean, it's not uncommon in the world of small business, but it's you can't compare this to anything. When you can't compare it because we've never had closed borders. For ever since most of us were alive, right? Since the Spanish flu, I think. Right, that was the last time borders were closed. Maybe since the war, I don't know. But anyway, exactly. It's a problem. We're not quite sure where it's going to go.
So obviously, then we should look at what benefits businesses are then trying to offer prospective candidates in this very competitive labour market that we're seeing.
Yeah, and so this is one of my major concerns, is that you can clearly see on the left-hand side what the order is when you're looking at it across all SMEs, and then you flip it to the other side, and these are guys that are finding it very difficult, right? So we know that the bigger guys are recruiting, and we know based on the order of those responses that those are responses that would come from bigger organisations, corporate responsibility initiatives, additional paid holiday, paid parental leave, and then we go into higher packages. So you flip it over onto the other side, and I mean, it's completely different. Right? So if these larger organisations are talking to the new employee that wants more flexibility and wants more benefit, then the smaller organisation can't necessarily deliver on that, and therefore it becomes again another difficult situation from a competitive perspective, and you end up again putting a huge amount of pressure on businesses between 0 and 20 employees, especially. So therefore again, you would suggest that if you're going to see damage and you're going to see closures, then you're going to see them at the bottom of the pile.
It's absolutely, and you look at what is it that the smaller businesses can control there and offer. So training, that's you can provide that, but it's hard to, and flexibility within certain reasons. But then can you meet the demands of higher salary packages?
Well, I mean you probably can't, and so it's not a particularly well-rounded strategy. And again, you can see by the response here, parking. I mean, the reason that a lot of these places can deliver parking is because they're in places that are not CBDs and not North Sydney's, etc., which is why parking's so low in those bigger companies. So anyway, it's another issue. I mean, it clearly just points to the comfort of large organisations, i.e. a lot of employees will be attracted to larger organisations at this moment in time because of the uncertainty in the economy, and if they're throwing those things at them as well as higher salary packages, then they're going to win.
And flexible working arrangements obviously then also talks to staff working at home as well here, and so what's the how's that trending now?
Yeah, so we've got 70% of organisations saying they've got at least one employee working from home, and 20% of staff. So we asked them what proportion of staff are working from home. Now, we don't put a number, is it 1 day, 2 days, 4 days, 5 days on this particular piece of research. But, these numbers are falling, and that's great because that means that, there's more people walking around the streets buying coffee and doing those types of things. The other reason that this is going down, of course, is because there's more movement of employees again, because there's more jobs available. And if you're a new employee, then you're more likely to go to the office because you need to be onboarded and need to meet people, etc. But the other reason that drives people back to the office is because, I'm an existing employee and all these new employees are coming, so I have to go and onboard them. But also, I better be there because they might go past me. They might, become the new, best friend of the boss or whatever it might be. So there's all of these, emotional issues that are driving people back, as well as that physical side of things. And again, I'm sure lots of people who are listening today are working from home and completely disagree with me, but that's fine. That's fine too.
And look, there's all those, those younger people who want to, potentially meet a partner, and we know the workplace is the one of the most common places where you meet your future.
I thought you only met people online. Isn't that it?
I think
so. You actually meet people face to face.
So actually, people are at home going to online dating sites, which is obviously impacting productivity. So we'll come on to that shortly.
Exactly. And we've got 20 minutes, so we better get moving as opposed to talking about your loved ones.
And if people want to come back to the office, do you want to have your staff vaccinated or not? That's the question.
Yeah, and so it's an interesting thing. The slide that's not here is that 73% of small business decision makers say they're happy to get the vaccine. They will get it when it's made available. I think it was 5% that had actually been vaccinated so far. But importantly, what do they think about getting their staff vaccinated? And I mean, it's kind of a difficult situation where you force people to have it. Well, so the question was, yes, where possible, we will make the vaccination mandatory for employees. And you can see that's gone from 12% to 15% over the last month, and we're up to 52% of SMEs who are going to have a say in what their staff are doing. So we'll see how that falls out. In terms of the next slide, it will show you that it's no surprise, hospitality are dead keen on their staff being vaccinated, and those guys in production, a lot of those again working with foodstuffs on production lines, agriculture, livestock, whatever it might be. So there's no doubt that the vaccination is supported by SMEs. And
having a COVID safe working environment obviously is an attractive proposition, and maybe to future employees as well.
Exactly.
So moving forward then, growth and so on, and what the next 12 months is going to be.
Yeah, so again, I mean, you can see from previous data, you get that green part of the bar at the top, whether it's revenue, whether it's employment. There's that 17% in this particular case that are buoyant. But I think it is important to note that there's 38% of people in April saying they're going to consolidate, which is basically I'm focusing on profitability, not setting the world right, and I'm going to and 29% who are recovering just to get me back to where I was. So so that's the theme. I don't see that theme changing too much. Where it is changing again is in those areas where you'd expect it to change. Production companies who are going gangbusters, and distribution companies who are moving the stuff that the production companies are making. So not surprising. I mean, maybe I'm surprised about construction, but maybe I'm not surprised about anything else. I mean, but maybe I'm surprised about construction. But yeah, generally, the vast majority of people are going to be consolidating or recovering.
So that's the longer term. In the shorter term?
In the shorter term, this is not a bar that I would suggest we want to see just going up and up and up, because again, a lot of people have recovered and some people are making more than they were. So having a third of businesses thinking that their business is going to get stronger over the next 4 weeks is a pretty good number, and we don't want that red part of the bar shifting. So if that stayed like that for the rest of the year, it would be a strong data set.
Well, let's look at the next quarter then.
Okay, so what is important is what people's perceptions is of the Australian economy and the global economy. And again, you can see here that in the April data that there was slightly less people thought that the Australian economy was going to get stronger over the next 3 months. Not surprising, JobKeeper ended, etc. So we were expecting that. What's important though is people are not saying it's going to get weaker. So that's good. And then compounding that, the issues around the globe drive economic success generally, and the weakness in those economies, whether it's the UK, the US, Europe, whatever it might be, there's a perception that it's not going to get weaker, which again will be related to the success of the vaccination programs, especially in the US and the UK. So overall, it's a more positive. It's a more positive outlook, even though the Australian side of things hasn't really got more positive over the last month. I think the trend is still positive.
And those, these sentiment factors will therefore have a bearing on business investment. Correct,
and that's the important thing. Again, when you look at the capital investment on the left-hand side, that's ticked up to 26% who are going to increase their investment over the next 3 months, and the number of employees, which we've talked about. And so that capital investment side of things obviously triggers lots of activity and triggers more people making stuff and more people doing something, more people distributing stuff. So yeah, it's again a strong indicator. Wage growth on the right hand side, again, probably expected that it's not going to shift too much, but you can see that 4% at the top. They're saying significant increase, so that just again demonstrates the need to retain and attract people.
So we're not going to see, significant wage inflation. It feels almost stagnation there in terms of wages.
Well, I think that's what SME decision makers would like to say. Whether they'll be able to keep it that way, we'll see. But as we know, if there is significant wage increase, then you're gonna get inflationary impacts and therefore interest rate impacts, which then obviously makes the capital investment side of things slow down, and it's just an ongoing circle, isn't it? But I don't know again about the wages situation, but I'd suggest it's not going to increase significantly.
And so that's business investment. What are we thinking in terms of
business investment?
Business,
so anyway, just quickly, I mean, again, just demonstrating there that the production guys are the ones who are going to be investing. They're the ones that are going to be employing, and they're the ones who are going to be spending lots of money on wages. So that in itself could become difficult. But again, hospitality numbers there are particularly interesting as well. So there's strength there, and distribution are looking like they're going to pay people more as well. So
I think it's time to look at what capital expenditure, what items of capital expenditure then are being invested in.
Yeah, so you can see it. I mean, lots of data on here. Apologies for that, but the final column is the important column, and you can see that it's ticked up across all of those categories. Our expectation with investment is that it ticks up as we run into the end of the financial year for obvious reasons, and we've still got instant asset write-off and those lovely things to work with as well. But again, you can see where those rows that are marked with the green bar is agriculture, construction, earth moving, and trucks. So again, no rocket science there. It's about production companies, it's about distribution companies, and hopefully the rest of the speed off of their growth.
And debt's cheap, interest rates are at their lowest. So in terms of financing needs, only 12% believe they require finance, despite the
so that's extra finance, and just so lots of people have got finance in place, and they've got overdrafts and facilities in place. So 12% who will require more finance, and then there's 31% that are saying they're unsure if they will. So are they unsure because they're concerned that they're not going to have the cash flow? Are they unsure because they're not sure if they're going to invest? They're not sure because they don't know what's happening with vaccinations and borders, don't know. But whichever way, this was a new question. We restructured the question, so we'll track it moving forward. But again, as you can see in that box on the bottom left-hand side, the production companies are the one who are going to be borrowing money, and those ones in the 20 to 99 employee size are the ones, and they're the ones that the smaller finance companies are always targeting, and the larger banks are obviously supporting a lot of those clients as well. So there is activity, but more important than that, because there's lots of people who print data about finance, but more importantly, that is what it's being used for. And so, clearly cash flow and working capital, is great, but funding growth in Australia and funding growth in new markets, so both of those are, 25 and 29%. I mean, that's positive. So we need that money to be used to grow, or it's good that we're using it to grow. So bearing in mind, it's still only, it's 29% of 12% and 23% of 12%. So there's still smallish numbers, but it provides a direction of where that money's going. So,
obviously, summing up now, it's been a story, I think, of gradual recovery, and very much a mixed bag, really. It's, some areas stronger, some areas not so strong, and still, significant issues around employment and skill shortages. But your take overall, James?
It's still a moving target. I think clearly that it's very positive that sentiment is strong. It continues to improve. The trend is a trend, as opposed to it bouncing around too much, and hence momentum creates momentum, activity creates activity, and we're lucky in Australia that it's been, again, a fairly systematic move forward. But again, I don't know what's going to happen. I have fears for a lot of these smaller businesses, that if the bigger businesses get first dibs on everything, I think it's going to make it harder for everyone. So there are some headwinds. There are some headwinds, and there are some tailwinds, and we'll keep tracking to see what goes on. But most people in the world would be happy with those numbers compared to what they've got in the UK and US and other areas. So it's just a case, there's going to be a period of consolidation and recovery. Some are going to go gangbusters, and hopefully that flows through to the rest of us, but there's going to be winners and losers, and there will be there's definitely going to be people that are going to go broke over the next 3 months, and the extent of that will depend on issues associated with obviously JobKeepers and skills and access to staff, and competitive forces, and inflation and interest rates, and the list goes on.
And so you kind of then think about charting out what's this kind of roadmap look like for recovery for Australian SMEs. You talked about skills, we talked here about cash flow, we've talked about supply chains, there's a whole bunch of things that you could kind of be looking at. Where'd you start? And
I still think, I mean, the issues you need to be looking at are still the same issues that you've always needed to look at, and that comes it just comes down to relevance, right? You just got to be relevant. So you got to be relevant to your customers, you got to be relevant to your supply chain, you just got to be relevant to your staff, so whatever it is to be relevant, then be relevant. And whether that's digital optimization, or whether it's product innovation, or whether it's training, or whatever it might be, that's what you need to do. So I just don't think that there's any one thing that people should look at. There's going to be pressures, and there's going to be serious pressures in terms of staffing issues, I'm sure. But the fact of the matter is that small businesses are always dealing with these issues, and I think, like I say, relevance to me is the key. You've just got to continue to make sure that what you're doing is what people want and what people are buying. And if people aren't buying what you're selling, then you're selling the wrong things.
Business 101: be relevant to your customer and know their needs and meet their needs in a frictionless way.
Easy.
Too easy.
Thanks again, everyone, for attending today's webinar. You can visit our website if you want to know more about the SME COVID-19 Tracker. Keep reading the weekly report and the blog, and share this widely across your personal and professional networks.
So if anyone does want any research, then we'd be delighted to help, because we're really good at it.